Hello, this is Vance, and this is Wednesday, March the 18th, 2015. And these are the CL trades for today using the slow hand method for price action. Before I get started today, I just want to look at, this is just before 2:30. I got the price of oil really ripped up from this area in the last 20 minutes or so. Since 10 after, we've gone up to, we're over $46 a barrel. Now I'm trading the May contract now because it overtook the April contract on volume. And you can see price really moved up very rapidly from a low of, what was that, $44.03. Now it's up to 46, but a lot of this move, $1.30 of that happened within the last 15 minutes or so. So prices bumped up. We have the FOMC report meeting today. And we also had the oil, the DOE report came out indicating that there was a significant surplus, again, another surplus. Price is really was bumping along 44.03 on the May contract, and it really didn't go back beyond that, even though when the announcement came out, price pulled back, bumped along this area, and then just moved its way out. So it looks like yesterday's low on the May contract was 44.41. It did dip below that by 30, basically 38 ticks down to the low of the day. Never really retested it a couple of times, and then moved its way higher. So you can see that that's where the case is right now. So you can see that off of the low, we're up over $2.50, which is a pretty decent run as far as the price of oil is concerned, which seems like at odds. And why is that odd? Well, it's odd because we had a fairly big surplus, which was announced 9.6 million barrels of oil, which puts it at an 80-year high as far as storage is concerned in the U.S., and yet the prices didn't go down significantly today. That's a couple of indications. Could indicate that we're maybe close to a bottom as far as the price of oil is concerned, and that price is going to have to move up from here. I can assure you that there's a couple of things that you have to look at. Is the fact that one thing is that price isn't going to stay down here. Companies that I mentioned this in the last week, you can't make oil drilling for shale oil or like horizontal drilling, do that real expensive recovery at $50 a barrel oil. This doesn't work in the short term, in the shorter term. So as those other wells that have been drilled and are coming on stream, you're going to see a drop in production going forward because they're not going to drill any new wells, and that has really been the case. I mean, when you look at the statistics as far as rig counts are concerned, they probably, since the beginning of the last, they've dropped in half in Canada and in the U.S. So there's only half as many working rigs today as there was a year ago over that same period of time. That's a 50% drop. Well, that's going to reflect in less oil production going forward. So once this oil production catches up, and because of the method of recovery or of finding and producing this type of oil is very labor intensive and cost intensive, you can't really make money at $50 a barrel. It has to be higher than that. Whereabouts higher than that? Well, depends on how much I guess you produce. If you get a good one, but it has to be more higher than $50. By how much? Fairly significantly higher. So we're at this price, below $40, is not going to stay there for very long. If it does even dip below $40, I can't see it staying there for a period of time, but again, that's just pure speculation. I don't think that's the case, and I think you can see that kind of like today. I mean, this is only one day of trading, and so it'd be a mistake to make any long-term predictions based on just a 24-hour period. But if you look at this chart right here that I've got up here, the 800-tick chart for the price here, let me just kind of draw on the thing. If you look where price oil came back down to. We got the 44.03 is the low. And that low was the daily low. That happened roughly 10 o'clock right here. Okay, so just before 10 o'clock. The announcement came out as far as the surplus was concerned. This is when the DOE report came out. You see price dropped down there. Didn't go below the low. Had a recovery, and then price retested this area again right here. This area, tried to retest it again, and found support. So this is really, this right along here is a supporting area. See, 44.03, so below $44, price just couldn't get down there. And then from there, you can see that anytime you were a buyer down near these areas where you see that there is some modicum of support, price really moved out here. And this area right here, this move up just took place in the last 20 minutes. And so we had 100 and like it moved up over $1.50, very close to that. You had to kind of pull back, and now this is really at the close. So, the FOMC report came out here, oil report, and yet you can see price didn't really go down to 44, below 44.03. And so what does that say? Well, it tells you, are we near the bottom? We got to be close to it. Will it go down to $20 a barrel? Unlikely. Will it go down to $40 a barrel? Don't know. I can't really tell you. But it doesn't seem that would be the case, particularly now that we've been in this since November. We've had this price of oil has been pretty low, and we're 4 months into this. As the thing is about oil is a commodity that's used up, and if you don't continue to find new oil and replenish stocks, yes, right now we're at all-time high as far as storage is concerned, but you cut off the tap as far as production, that will be eaten up very, very quickly. The only trouble in the short term that we're facing in the U.S., or what the U.S. is facing, is the inability to store oil. As far as above ground is concerned, production, delivery, store oil. But you can store it in the ground. You just don't make it, don't produce it. You just shut it in. You shut in the well. So that's storage as well. But producers typically don't like to do that. Once you develop a well, you want to make sure that you continue to make it flow. And there's a reason for that. I mean, if you stop up a well, it can get plugged up. Paraffin or any of the materials will prevent the well from flowing. So you want to continue to flow the well so that it will continue to work up. Unless if you shut it in for any particular period of time, you have to clean it out, and that's an added expense. So the better course of action is to not produce at all, or not to drill any more wells, which has been evident in the United States and Canada. There's rig counts are way down as far as production is concerned. Anyway, that's just kind of the background material. It doesn't really influence the price of oil for us as far as traders are concerned, and where those bottoms are, particularly on this chart here. You can see this in the short term where price really can't go down. So let's talk about that. I'll just let me make this bigger. Okay. So let me tell you what my thoughts were for today. Price had traded down to this area, and remember the DOE report, anytime when price opens, kind of looking at it, you can see that there's a pretty tight trading range right here. So price traded down in the overnight. This is at 9 o'clock. A very narrow trading range here between, let me just move this bigger. So we had a fairly narrow trading range between this area. Now, the reason I moved this to here, here's price moved up, couldn't find any support to move up higher, but really couldn't punch through and move any significantly lower, except when we got to 44.03. Now, that's not really that low, so the high is 44, let's call it 44.30. Let's call it 44.27. The low is 44.03, so we're looking at 24 ticks, basically from 8:30 to 10 o'clock, so that hour and a half. We're just trading a very narrow range. Price did move up. Okay, so price did move up. This is like 10 o'clock. And anytime, let me just give you my view on the DOE report. After 9 o'clock, price has been moving in a pretty tight range. This is obviously in anticipation for that DOE report, how price is going to move. And so we had this at 10 o'clock. This moved up, maybe in anticipation that there's going to be a decline, or like price of oil is actually going to be used up. And yet when the announcement was made, there was a surplus of 9.6 million barrel surplus, which was another build. I think it's like 10 weeks in a row, I think now it is. That's 10 weeks. It's a fairly significant build, almost over twice what it was last week. I think it was 4.6 million barrels last week. It's 9.6 this week. So it was almost twice what it was last week. And so price really kind of sold off very quickly as soon as that announcement was made. But notice where it went. It really didn't bust through 44.04. It didn't get down below that. And so it really respected this base right here. And if I mark it, you can really see it. I'll do it again. You see right through this area. Okay. Right through here. You can see the low and price even at this. So this is 10.31. So from here, 10:30, this happened a minute. We had this sell-off. And yet when it got down to this area, it found support. You can see this price is moving down, slowly moves up to this way, pulls back down to here again, and then it really kind of hits another blocking. So this is after 11 o'clock. So after 40 minutes, from this area, come down to here, I'm thinking that this looks like an area where we start to have the support. So we have this capitulation. Price moves up to here. Now, if you're looking at it from a standpoint of a measured move, you can see that here to down here is really kind of like a tight trading range, but it's a pretty wide one. So price moved up, pulled back, moved up here, falls down to here, moved up. And so this looks like maybe the secondary portion. If I'm looking to the left and we're looking at these areas, I'm looking for support. That's what I was looking for. So now the support, does the support actually come in here? Is this good enough to take a trade? For an aggressive trader, perhaps, and it's because if you look at your 15 tick stop box, just kind of clear this off. If you look at a 15 tick stop box, and here you could get in so that your purchase is below where the daily low is. This is 15 ticks. If you're an aggressive trader, you can do that and be willing to wait it out. If you feel that now we've had the break of this trend channel, we have support here, but you can also keep in mind that when price got to this area, this is what I've got. This is a second entry short, makes a new low. This is the first entry, pulls back, second entry short. And so, again, this may, you might consider this as the first move down. We had this pullback to here, and that we may go, this might be impetus for going lower. But remember what I said. I was saying that this looks like support to me, and unless, it depends on where you get in with this. If you limit in on this trade, that means that your 15 ticks should be somewhere where that support is. And so that's really the only way I would get in on this trade, is that if I get my limit order at 44.33 with the expectation it's going to test this area. But this is awfully tight. So the only way you can do that is if you say, okay, I'm going to sell right here, somewhere in that neighborhood, with the expectation my target, my first 15 ticks is going to be down here. And as you can see, if I wait, if I'd done that, it would have been all right. But I didn't like it because of this overlap. Even though we had this overlap and it looked like it was coming in, by the time this bar completes, which is a very strong bar, we're really too close to this bottom. So that means that we have to really retest this low, which we've already done twice, arguably 3 times, in order to get our first contracts off. And I didn't know if that was really the case, so I waited on it. That's why this is a more difficult trade, despite the fact that we had the first leg down, and this could very well be the start of the second leg. Price gets down here, and it's a good thing you wait, because once it got to this area, and more capitulation based off of this. And so again, looking at buying in, where would you buy in? You would buy in. This would give me more impetus to purchase in this area. So put a limit order here, and even if you waited, once we had this a fairly strong bar here, at the top of this really tight trading range, this is like, remember, tight trading range is like 3 bars. In this case, I would be looking at perhaps buying, looking at retesting this area, and this is yesterday's low. So you can see that price is really rotating around here over the course of the last, well, since the report came out. So this is that's what I was thinking in this case. Price not only made this area, but really jumped and moved up, retested almost the daily high to here. Okay, retested the daily high. We had the first break of the trend channel, moved back down. This is like a measured move. You can see this measured move right here. So we had moved to the new low, pulls back, second move down. Again, do you take a trade here? Do you short on this area? Well, you could have, but again, what I didn't like, it's an aggressive trade. Think that we're going to get the measured move, but as you can see, I would say you'd like to be able to be in a situation where you have enough room to get up to these double bottoms. So if you limit it in, like from here, you would have been, with your target being right above these ones right here, it would have just got your 15 ticks. It's almost 15, it's just 15 ticks here. Went further, but then price got to this area right here, and this is the second entry long off of this one. First entry long, second entry long right here. And I thought this was a really good trade, because what was previously resistance now turns into support. And so this was resistance earlier on, pulls back, and it was resistance, almost resistance from this area, but more importantly here, resistance, pulls back, and then once we get into this capitulation, this was a place to take a trade. Aggressive nonetheless. Your stop is below this area, not quite below this area, but I thought there was enough momentum that now I'm looking at maybe a measured move. We had such a strong move out of here, first pullback, second pullback. I'm looking for a measured move. That's why I've got this other arrow here. So now I'm looking at retesting here, plenty of room to get out, which it does. And this turned out to be really basically the trade of the day right here. Moved up, and then we have another pullback. Now this is getting really close to 2 o'clock. Now, right at 2 o'clock, this is where the FOMC report is out, and so this, you put this trade in. This is 22. So look at the movement. This is 20 to 2. The movement up here pulls back, and this is really after the. You can see prices moving its way up higher. Look at all the volume that's coming in here, especially this is from 2 o'clock. So this is just less over 45 minutes. Now it's 1:45. So look at how it's moved right out of here. Now, so that's what I was looking for. Because the FOMC report and because of the DOE report, there's really not a lot of opportunities for me to trade because I'm really kind of stay away from those types of, that news. Those are really the two news-driven events that I really respect more than anything else. Now, let's take a look at this area. Why do I have this marked out here? The reason I have this marked is because now you can see price. This is the high of the day, pulls back the previous high of the day, retests this high, breaks through, pulls back, and now there's some hesitation here. And my thinking is that if it breaks through here, we might retest this area. The problem is that this was just after 2 o'clock, after the FOMC report. In order to get into this trade, I wanted to limit into here. That would be the safest trade with your 15 ticks. But you can see there's really not a lot of opportunity from that standpoint. I mean, it would have to be a limit on this doji, which is not a great bar. But when it closed, I say that, well, this may be worth taking as long as your stop is down here. The thing is that I was looking at it. I was thinking of putting it like this is, again, this is way late. And but I wasn't able to put that trade on. It just kind of moved away. And even though I was like thinking maybe just put a single contract on here or something, it really moved out of here very quickly. I was going to do this as a demonstration trade, but because of the lateness of the day, it was like quarter after 2. Half hour was going to be very short. And as it turned out, look what happened. As soon as it found that purchase, it really rocketed right out of here and went and beyond. Now, do I feel a little bit? You can't tell. This is like almost like a black swan event on this date, like to have this kind of movement. I mean, I'm thinking that in hindsight, and again, this is hindsight. You see pullback, first pullback failed, second pullback failed down to here, and that you're looking at getting out, at least making this move, and it did. Not only his first move, but it just kind of continued to pick up momentum. So you can see there's huge pent-up demand. Buyers really stepped in and really drove price a lot higher. So from this marker, basically from $45, it went up to $2 in not a very long period of time. So that's pretty much it. We're kind of like sideways in a fairly tight range. I mean, there's the report. And then once the FOMC report drove price back down to this area, kind of went up on the report, came back down, and then, of course, fine purchase, and then zipped right up here. So that's the way I can explain it for today. That's it for now. If you have any questions, please let me know. This is Vance. The phone ringing. Bye for now.